Hey everyone, welcome back to UJXanti. In this series, we try to understand whether the current rally of Bitcoin resembles more with 2019 scenario or it resembles more with 2020-2021 scenario. These two rallies, the rallies of 2019 and 2021, had many differences, and we discussed those differences in different parts of this series. And in today's part, we are going to concentrate on ETH Bitcoin valuation. Let's move on to the chart of ETH BTC. Here we see that Ethereum underperformed Bitcoin for the last couple of years, starting from 2021. And interesting thing is that it's not the first time that Bitcoin rallies against USD for many months and Ethereum underperforms Bitcoin. If we overlay the chart of Bitcoin in terms of USD, we can see that, let's move this down. This is the rally of Bitcoin in 2019. This is the bear market rally that we are talking about. So Bitcoin rallied more than 300% in USD terms. Altcoins, the general market of altcoins, underperformed Bitcoin, and Ethereum was not an exception. It underperformed Bitcoin in this rally. And as we can see, ETH Bitcoin valuation dropped from 0.036 to 0.016, more than 50%. Actually, from the top, if we measure it, it's more than 60%. And we see the same in this rally. Bitcoin rallied more than 300%. However, we see that in this rally, Ethereum underperformed Bitcoin, similar to 2019. But it's not always the case. For example, the other rally, the parabolic rally of 2020 and 2021, Ethereum outperformed Bitcoin by a big margin. If we start after the recession, which is here, that's when the parabolic rally started in 2020. Ethereum outperformed Bitcoin by 330%. And remember that during that time, Bitcoin went up more than 10x in USD terms. And when it comes to the position of Ethereum in the market, some people consider it to be the biggest altcoin. However, others consider it to be blue chip, alongside Bitcoin, of course. And all of us can accept that Ethereum is more risky than Bitcoin. It means that if both of those assets provide the same reward, the majority will choose Bitcoin because Bitcoin has less risk. And that is very important when analyzing rallies and when analyzing Ethereum Bitcoin valuation. And we can see that in 2019 and now, in these two rallies, Ethereum underperformed Bitcoin. And from my perspective, the primary reason was the macroeconomic environment and conditions. Because we discussed this in the previous parts of the series. So in 2019 and in the current environment, we have quantitative tightening, which means that the Federal Reserve tries to suck out the liquidity from the markets. They just sell their assets from their balance sheets. And also, the interest rate was 2.5%. They had a rate hiking cycle in 2019. And we had a rate hiking cycle that started in early 2022, and we are still in it. And the terminal rate is 5.5%. Most probably the terminal rate, because there is a chance that they will hike. However, it seems unlikely as of now. Thus, ignoring the monetary policy and the overall macroeconomic conditions is not the best strategy to employ when it comes to understanding different rallies and understanding whether the rally will fade away or it will last. Because at the end of the day, we need excess liquidity and newcomers into the market. So, for the rally to be a sustainable rally, something that we had in 2020 and 2021, we need two things: newcomers, and we need excess liquidity. Why we couldn't sustain this rally? Because the macroeconomic conditions were tight. A lot of people just had to sell their bitcoins, and they didn't have excess money to buy Bitcoin or altcoins, any type of crypto. And it may be similar in today's environment, because we see that Bitcoin currently struggles. And actually, it just broke down its 61K support zone, which doesn't look good. And it broke down its 21-week EMA as well. And no matter how bullish we are on Bitcoin, we need money to buy more Bitcoin. And the indirect goal of the Federal Reserve is to cut the level of liquidity in the markets. So to cut the excess amount of money that companies and households have. So you cannot ignore quantitative tightening cycles. You cannot ignore interest rate decisions. Sometimes they will affect the markets and even households like in 1 or 2 years because they work in lags. However, their effect will be visible. For the rally to be a sustainable one, in simple terms, we just need more buyers than sellers, which means higher demand than supply. And currently, Bitcoin sits at $54,000. Let's check that. Yeah, it's 54K. And psychologically and financially, it's not the worst time to sell if you need money. Because the effects of the quantitative tightening and the effects of 5.5% interest rate will be visible on companies and households. And one might argue that it's already visible and we already see the signs. And one of the reasons that the markets are still strong is probably the expansionary fiscal policy run by the Treasury, which will not be forever. Chances are that the Treasury will continue its expansionary fiscal policy until November of this year, when there is US presidential elections. Because don't forget that the Treasury is part of the government. So they are part of the Biden administration and they have an incentive to have expansionary fiscal policy. However, after the elections, chances are good that expansionary fiscal policy will end, or at least its rate will decrease. And also, that time we might see the lagging effects of quantitative tightening and 5.5% interest rates. Coming back to Ethereum Bitcoin chart, we just see the same thing that we discussed in previous parts. Ethereum is riskier than Bitcoin. And when the conditions are not good, whenever we have quantitative tightening and the interest rate is high, it just bleeds to Bitcoin. Yes, Ethereum most probably rallied in USD terms in this period. It indeed did. However, you would be better off having Bitcoin in your portfolio than Ethereum in 2019 rally. In this rally, if you selected Ethereum or altcoins, the general altcoin market, not some specific altcoins, you would have riskier portfolio than Bitcoin because Ethereum and altcoins are riskier than Bitcoin. However, you will not get extra reward for taking that risk. Conversely, you will have less reward because Bitcoin outperformed the general market of altcoins and Ethereum in this rally. And it is exactly the same in this rally. And the chart of Ethereum Bitcoin, similar to Bitcoin Dominus chart, simply suggests us that investors and the general outlook was not optimistic back in 2019 and in this rally, in the current rally. If investors are optimistic, they will just buy more risky stuff. They will not stick to Bitcoin only. And that's what we saw in this rally, in the rally of 2020 and 2021. Altcoins had higher demand than Bitcoin. So people were optimistic on the macroeconomic conditions and all other things. They had excess amounts of liquidity, extra money that they can put in different markets. So they wanted to take more risk and they sought more reward. That was the case in this rally. We see the same thing in ETH Bitcoin chart, of course. The picture is the same, identical. Ethereum experienced higher demand than Bitcoin because people wanted to take on more risk by buying Ethereum and they wanted to have higher reward than Bitcoin can provide. This suggests that investors in this rally suggests that investors were optimistic, and we can see it in ETH Bitcoin valuation. However, it's the opposite here in 2019. So Bitcoin rallied in USD terms and investors sold their Ethereum into Bitcoin. This is the suggestion of this chart, after all. And not only Ethereum, but altcoins as well. And it's the same in the current environment. The rally that started in 2023, Bitcoin outperformed Ethereum and it outperformed the general altcoin market. And people sold their Ethereums and bought more Bitcoin. That's the interpretation of this chart, of this downward sloping pattern that we see. And if we concentrate on the last few quarters of this chart, Ethereum Bitcoin valuation, let's first get rid of the drawings. We also don't need the Bitcoin USD chart. Here we can see that the rally started in early 2023, and from that moment on, there is something not very bullish suggested by this chart. Here we have a descending price channel. And as you can see, it developed a support and a resistance zone. And there were multiple instances when Ethereum almost had a breakout, but it couldn't, indicating that the environment is still tight and Ethereum bulls couldn't take control of Ethereum and they couldn't outperform Bitcoin. So until this chart has a clear weekly close over this resistance zone, clear breakout, it suggests that we are still in risk off environment. So if the environment changes and it becomes risk on, Ethereum investors and investors overall, newcomers, they will just be more bullish on Ethereum. They will take on more risk. They will consider buying Ethereum, and the demand for Ethereum will go up. And it will be enough to break this downward sloping price channel. However, until we are in this downward sloping price channel, the outlook for the overall market and the rally is not good. And by the way, I'm sure you noticed that. Let's first remove the drawings. I'm sure that you noticed that Bitcoin had a few daily closes under its main support zone of 61K. So here, there are a few ways that you can draw the support line. However, it is close to 60 or 61K. You can draw it close to 61K. So this was the support line. And we had a small fake out. However, after the FOMC meeting, Bitcoin bounced back and it went to the resistance zone. And it was rejected 2 times. And here we had 2 daily closes. This day is not closed yet. However, we are already 5% down, so chances are high that it will be a red candle when the day closes. So this doesn't look good because it suggests that Bitcoin will now find support somewhere else. If we go to weekly chart, we see that Bitcoin had a consolidation zone somewhere from 40K to 44K. This might become the next support zone for Bitcoin. By the way, it is $10,000 lower than the current price of BTC. And if we zoom in and try to compute the drawdown levels from the all-time highs, we see that we already had 27% correction in this cycle, which is the biggest. If we compare this with the prior corrections of this rally, this one was a small one, so 22% only. Then we had something close to 20%. This one was also close to 22%, yeah. And this one was 21%. So this is the biggest correction of this rally. And we are yet to see whether we have a continuation of this correction or not. Let's get rid of this. So it's difficult to find any support zone close to the current price. We might look at some price levels from the last cycle. But again, it is 47K. It's another $7,000 lower. Another important thing is that Bitcoin not only crossed and broke down its 61K support zone, it also broke down from its 21-week EMA, exponential moving average, which acted as support for Bitcoin in this rally. and not only in this rally, but also in 2020-2021 rally. As we can see, in this rally, which is the parabolic rally, we had multiple instances of support at 21-week EMA. And whenever Bitcoin couldn't hold 21-week EMA as support, that correction turned out to be a big one, more than 50%. Yes, it is correct that we had a second rally, like continuation of the rally, and then we had a new all-time highs here. However, this correction was 55%. I don't suggest that Bitcoin will not have a new all-time high this year or maybe next year. No, I'm very bullish on Bitcoin in the medium and long term. However, I suggest that this part, when Bitcoin broke down its 21-week EMA and it didn't hold a support, may again be another instance when Bitcoin has a correction of 50 or 55%. Actually, it's not important. Maybe it will be 40%. If it goes to 44K, yeah, it will be around 40%. However, it will be terrible for altcoins because we know that when Bitcoin goes down, altcoins usually go down much deeper and much faster. Another interesting thing related to this drawdown that we had in the few days, in only 4 days, Bitcoin is down more than 40%, 14%. And when we come to Bitcoin dominance chart, we see that those 3 days that Bitcoin plummeted for 15%, Bitcoin dominance didn't go down. In fact, it went up, indicating that altcoins went down much more than 15%. That can also be seen if we divide total 3 with Bitcoin, the altcoin market to Bitcoin's market cap. Here are the last 3 days. We see that altcoins underperformed Bitcoin even when Bitcoin went down 15% in 3 days. And for example, I have got a few altcoins in my watch list. I can see the result. Matic USD, for example, it went down 10%. Bitcoin is only down 4.6% today. Ethereum is down more. And there are many more. Most of them are down more than Bitcoin. And here is the result of not a few altcoins, but the general altcoin market. This is what matters for us. To sum up, we can state that in 2019 and in the current rally, when Bitcoin rallied over 300%, we saw that Ethereum Bitcoin valuation went down, indicating that the demand for Bitcoin was much higher than for Ethereum, which in turn indicates that the environment is risky and the outlook is not positive. So investors are not optimistic. They don't want to take on more risk for extra reward. The primary reason from my perspective was that we had quantitative tightening in 2019 and in the current rally. We also had high interest rates in 2019 and we have 5.5% interest rates as of now. However, we see the exact opposite in 2020-2021 rally. Again, Bitcoin rallied against USD. However, we see that Ethereum outperformed Bitcoin. And that's the case for the general altcoin market as well. There were higher demand for Ethereum and altcoins than for Bitcoin. So investors were optimistic on the future. They had excess liquidity, disposable income to support their optimism. So they took on more risk. They put their money in Ethereum and altcoins, most of their money. Of course, we had buyers of Bitcoin as well. And the result was that Bitcoin underperformed Ethereum and altcoins in this rally. So from this perspective, from the perspective of Ethereum Bitcoin valuation, the picture is very clear. In 2019 and in the current environment, in the current rally that we are in, Ethereum Bitcoin valuation goes down, indicating that the environment is risky, most probably because of the monetary policy and the macroeconomic conditions, and possibly the geopolitical risks that we have. However, the picture was the exact opposite in 2020, 2021. Altcoins and Ethereum rallied against BTC, indicating that the environment is less risky, indicating that investors are more optimistic and they have excess levels of liquidity, excess money that they can support the rally. And that's why we had sustainable rally, we had alt seasons, and we had risky assets outperforming less risky assets. Altcoins and Ethereum outperforming Bitcoin. So this was the material that I wanted to share with you today. I hope you found it informative and interesting. If that's the case, please like and subscribe. Thank you for watching, and I'll see you next time.